think we're live. Hello, everyone. Thank you so much for joining in. My name is Zubair. I'm the founder of Meena Bytes. Welcome to the second episode of COLABS Talks. After moving it online, we're going to discuss the future of fintech in Pakistan, financial services companies that are operating in the technology space. We've got some amazing panelists with us today. We're running different startups in the financial technology space and have been doing this for quite some time. Some of them have not launched their product yet, but they've still been in the space for like over 2 years. Starting off with Noreen, if you can quickly tell us about yourself and Taze.
Thank you, Zubair. Well, I am Noreen Hayat, the co-founder at Taze Financial Services. Taze is Pakistan's first fully digital full-stack neobank, and we are providing a full stack of financial services, including credit, savings, insurance, and investments, all through a smartphone application. So technically, we are a bank on a phone, without a banking license, because Pakistan doesn't have a digital banking license for now. So what Taze is primarily doing is providing its platform, to provide these services in collaboration, not only through our own application, but also in collaboration with banks, payment providers, insurance companies, and various consumer-oriented businesses. So that's really the vision of Taze. And I'm just going to add one more thing. What we do is we provide these services within a matter of minutes, as opposed to how conventional institutions would really serve the masses.
Right. Thank you, Noreen. Halima, if you can tell us about yourself and Uran.
I'm Halima Iqbal. I'm the CEO and founder of Uran. Uran is a collaborative finance platform allowing people to raise capital and save money through digital committees and moving people from the informal sector into the formal sector.
Right. Thank you. Yar, if you can tell us about OneLoad and yourself.
Yes, hi. My name is Muhammad Yar Hiraj. I founded a company called OneLoad. It is a retailer management app, which essentially allows retailers to procure products from different telecom companies and banking services and provide them to walk-in customers. We launched the app in 2016, and we have about 34,000 active applications in Pakistan. At this point, our platform has served a little over 180 million walk-in customers since inception.
Right. Thank you. Brandon, if you can tell us about yourself, what you're doing in Pakistan.
Sure. Thank you, Zubair. So I'm Brandon, founder of SadaPay. I'm an entrepreneur who's been building apps for the last 14 years in a number of different verticals, and more recently, I've gotten myself into fintech. People are curious, what is the white guy doing in Pakistan, usually?
Yeah.
So after landing an acquisition from my last startup in 2017, I took a break to explore opportunities in emerging markets. I was infatuated by the idea of fintech in a developing country to make more of an impact than a more developed country like the US or Europe, or countries in Europe. So I was introduced to Pakistan by a friend of mine from university. I was obviously impressed by the macro conditions here. A large percentage of unbanked and a huge number of smartphones. So obviously a play for a digital bank, as Noreen was explaining. So with SadaPay, we've essentially just received in principle approval from the State Bank of Pakistan for our e-money license. We would love to say that we're a digital bank, but we're not allowed to. Eventually, we do aspire to become a full stack digital bank, offering all sorts of financial services from deposits to lending, insurance, etc.
Right. Thank you, Brandon. Noreen, this one's for you, and then I'd like to have other panelists also share their thoughts on this. One of the biggest conversations that we keep hearing around financial services in Pakistan is the massive population that is underbanked or unbanked, and a large part of that population being women. So there's obviously a big opportunity out there, but this opportunity comes with a lot of challenges on the regulatory side, challenges in terms of educating people to use these digital financial services you guys have been building this for quite some time now, and you've been experimenting with different types of products. What do you think has been the biggest challenge in building this and providing these services to the consumers?
I think there were a few questions in that question, and I think I'll bifurcate that, because you addressed the challenge of gender disparity in financial services, but at the same time you also addressed other challenges that overall Pakistan is facing on the financial exclusion front. So if I am to first begin with the overall financial exclusion front, yes, we are a population of over 210 million people right now. But what we feel, what hasn't really worked in these over 70 years, is that despite Pakistan having 43 banks, they have been unable to cater to the actual needs of the masses when it comes to their basic day-to-day needs. For example, banks or other financial institutions do not cater to the masses if they don't have a credit history. Only 1 out of 10 people in Pakistan are registered on a credit bureau. Other than that, they are just very hung on to the legacy systems without any risk rating tools. And in the absence of data, it's very difficult to even come up with something as close to a credit score. So, those are some challenges on the institution front. I think another challenge that exists over here is that these institutions have a very product-centric approach rather than a customer-centric approach. So there's been a big product mismatch in terms of the needs of the customers. It's been primarily a one product fit all strategy that these institutions have been following without any proper focus on user experience. So I think those, overall are the challenges that these institutions have faced and which have deterred these masses to come to these institutions. But when you talk about, the masses, there are a few elements that really play their role. So other than, that of financial illiteracy, I think another huge impediment here has been their access to brick and mortar structures. And I think that's one of the biggest challenges, mobility and social interaction limitations for women. Only 9% of Pakistan's women have access to financial services as opposed to 37% of the males. So that's a big gender disparity gap. And I think interestingly, we've conducted some surveys across different parts of Pakistan. And, even with this, in the past 2.5 years of operations, we've seen that the psyche and the financial needs of men and women really do differ. Within the same household, if, a man of the house will ask, oh, how will I get a loan? A woman in the same household will say, how can I save? So I think that the difference in mindsets and the way consumers operate is something that's been missing from financial institutions for the longest time. And so I think that element has to be addressed in addition to the trust deficit that these institutions haven't been able to bridge.
Right, sure. Thank you. Halima, if you can answer this one, and if you can also tell us a little bit about the business model that you guys have at Udaan. Committees have been there in Pakistan like for ages. I've used them as a medium to secure some quick money myself, arranging it with friends and trying to get a small pool even whenever possible. How are you digitizing it? If you can answer both these questions, first around the challenges in building Udaan, and second, how are you digitizing committees in Pakistan?
I think one of the challenges when we started out was understanding what the customer wants. Like Noreen rightly pointed out, right? Like the financial institutions here in Pakistan have been so product centric that they've forgotten what actually the customer wants. And what are the literacy rates around it, whether the customer understands the product that the financial institution is building or not, how does that fit in people's lives, how are they going to access it? All of those questions we went on to research, and it started out with a very simple question for us, that why is your savings to GDP so low when there has been work done on the financial inclusion side, and that rate we saw was increasing year on year, though it was a very small increase, but it was increasing. However, on the savings side, it kept on decreasing. We started out with a research survey to understand how people saved and how people raised capital for their life events, and found out that 41% of the Pakistani population was saving through committees, whether it was directly or indirectly. And that went on to understand the challenges when it comes to the informal sector and informal ways of doing committees. There are power dynamics around it. There's a whole myth that only women do committees, but that's actually not true. 1.3 times men also take part in committees. So we started off with understanding those differences and gaps within the market, and very quickly also realized that those are also the hindrances which, from people's perspective, into the formal economy. So there were four very obvious reasons why people relied on the informal sector and not on the formal sector. One was access to liquidity was faster. If people were to go raise this capital elsewhere, either the interest rates were too high or they were not capable of getting it. The other thing was it was Sharia compliant. Religion does play a big role when people want to interact with financial institutions in Pakistan. Plus, it was a sort of a forced budgeting aspect. If your disposable income is so limited, you have to make sure that there are other ways that you are able to keep some money aside so that you can buy a fridge or TV or pay for your kids' education, whatever it is. The banking system has failed a large part of our country's population. So these people relied on their communities, where social capital actually becomes so important. And those were the things that we started seeing and started building the model around it. When we look at the challenges that currently people face, there's a massive trust deficit. Plus, there's lack of awareness. Nobody knows, like, even if I want to raise capital right now and go to a bank, the documentation required, the complexity in the products banks have built just deters me from raising capital from a formal institution. I'll rather rely on my community. And that's where we come in.
Right. Thank you so much, Halima. There have been some similar companies that have done really well in Africa, similar to what OneLoad is trying to do in Pakistan. Now, you guys have been building an entire ecosystem around the product that you have. What do you think is the biggest use case of OneLoad? What have been the biggest challenges around building OneLoad into what it is today?
Yes, OneLoad is actually, in fact, somewhat different from many of the other models that exist in Africa and elsewhere. We are an app for retailers, and in most cases, similar sort of access to financial services through the retailer has typically in Africa been done through physical devices that have been given to retailers. So they've primarily been based on closed platforms such as POS machines or tablets and this and that. We, on the other hand, simply ended up providing a app to, any retailer can download our app, register in a few moments, and start making money through it by serving walk-in customers. So it was very interesting that when we first got into the market with the idea of doing it, everybody told us that the Pan Wala will never use a smartphone. He's not smart enough to use a smartphone. Our app was in English. We thought we'd change it into Urdu later on. That was the first iteration. We've never had to, in fact, simply because apparently everybody that our users are very, very low income retailers, micro SME, not just SME, but micro SME. And we've had it's interesting that we've had no issues on people adopting the service as long as they're able to make enough money from it. So what we realized that pretty early on was if the retailer is given products that he can sell to walk-in customers, they will go through the hurdles themselves. They will buy the phone themselves, get 4G connectivity themselves. learn a few words of English if they have to. It doesn't matter, but they will adopt the service if it makes money for them, and if it serves a market need. So that's been, and I was very pleasantly surprised. We've never had to give any promotions to anyone to use our service. In fact, our 70% of all the retailers we've signed up have come to us instead of us or our representatives going to them. So it's sort of challenges a lot of sort of the stereotypes I used to hear about in Pakistan, that the low income don't know how to use smartphones, are completely disconnected from the digital world, and do not, or rather have too many barriers to adoption. One thing to note is that I think as far as Pakistan as a country is concerned, the number one problem are and this is referred to the earlier speakers, Halima, as well as Noreen earlier on, that the traditional network of financial services, which was the brick and mortar branches, they sort of have failed the mass market in a big way. So more than half the population feels that those are not for them. And if you look at the number of people who are actually actively using the banking system more than twice a month, that's probably less than 5 million, and that's tiny if you compare the size of the country. So if you look at the evolution of fintechs and digital services, typically the first thing to try and solve is access and inclusion. The second one is then ease of usage, as you were saying earlier on, that there is clunkiness and there is services which are somewhat cumbersome to use. And then the third step possibly is financial life and financial wellness. So what makes my life easier? What mortgages do I want, etc. We are very much at the first step, which is access and inclusion. So the one load model was built around saying that if people cannot get financial services, whether it is access to digital payments, whether it is the ability to send money home through the leading brands such as EasyPaisa and JazzCash, we aggregated all of them in our app, and we basically helped towards solving the problem of access to the consumers, and at the same time providing something that clicks for the low income retailer to make their lives easier. Hello?
Sorry, I was on mute. Thank you so much for sharing all the details. Brendan, what have been the biggest challenge in building SaraPay, apart from getting the license? Obviously, that must have been a huge relief. Apart from that, what have been the biggest challenges, and where do you stand right now?
Sure.
Where are you guys launching?
Yeah, so I think as a foreigner, the biggest challenge has just been becoming familiar enough with the market to really make good decisions as the founder of a company. So thankfully, we have a number of really talented ex-bankers who are on the team and technologists. But really, it's just a very, very new place for me. And over the last 18 months since I've been coming here, the original idea was actually to go after the lower income demographic and have a financial inclusion play, as the other panelists were just discussing. But the challenges there for launching a fintech are that you need to have a business model that makes sense. And when you go after the lower income demographic, we saw that it would be a challenge to have a sustainable model when they have such a small wallet size and such small margins for the financial institution. Realistically, you need some level of economies of scale to go after the lower income demographic. So a big challenge for us was trying to find a place in Pakistan where we could make a great impact. And I personally thought, based on what I've learned from other emerging markets, that we needed to realistically go after the middle income demographic, where we can find users who would be more open to trying digital financial services, where we could find margin and create a business model that has some longevity to it. That's the point in where we could find some economies of scale, and then eventually get to the size where we could include the lower income demographics. So the process to work with the regulator and get a license, or the in-principle approval for the license, it takes time because you need to go through all of this documentation. They need to become comfortable with you. So it's not as if that was a challenge. It was just a matter of going through the motions. The challenge was really trying to find a place where we could fit and product market fit. I think, even though we haven't launched yet, we've facilitated 4,000 customer conversations and tens of thousands of people have already signed up for StartUp Pay. We haven't issued our first account yet. So the challenge has just been learning, really just trying to figure out what customers need and where we can make an impact.
Right, thank you. Noreen, Yar talked a little bit about this. You also touched upon it. Now, when you're building financial services, when you're building a product for the lower income demographic, the people who don't have a lot of money to spend and who are perhaps going to use your services to access credit and a lot of other things, you obviously have to engage with these people to learn about their consumption habits and also to kind of shape your product direction and strategy. How did you guys do that early on, and how did you get your first few users, let's say first 1,000 users? What was the process like?
Well, you know, it's interesting.
For some reason, I don't hear you guys.
What Brandon was also mentioning right now. Can you hear me now?
I think yes, it's better now. Yeah.
Can you hear me now?
Yes, it is better now. Yeah.
Is that okay?
Yeah.
I'm
Please
sorry
go
about that. Well, so 12% people in Pakistan have access to credit. Now, I think I'm going to revert to the challenges that these people face and how we found that product market fit. Now, if you talk about commercial banks and you talk about getting something as simple as a credit card, it takes nothing less than 30 days to get one. And ever since credit cards launched in Pakistan in the mid-early 90s, we have only been able to have about 1.5 to 2 million credit card holders in Pakistan right now. And that's pretty bleak. Now, if you talk about microfinance, on the other hand, this was a sector that was solely created to target the grassroots and the base of the pyramid to address the poverty alleviation agenda. What happens with those institutions there is that they only provide credit, for example, for productive purposes. So, there hasn't been anyone who really has been addressing the consumption needs of the masses. And all of us, and of course more so at the low and moderate income level, everyone has liquidity requirements. Everyone faces those day-to-day liquidity gaps. And, it was obvious for us to have, initiated our operations with something that was the lowest hanging fruit, and which was credit. Because everyone needs that liquidity, either, it's to pay for food, if it's to pay for medicine, or, education, utility bills, just name it. So, during our initial research, it was just but obvious that, credit was something that everyone needed. You talk about a household stuff, you see people coming to you for, advance, monthly advance. You see people, working in, whether it's blue-collar workers, whether it's, even the lower spectrum of white-collar workers, everyone needs that. So I think determining that credit was the need wasn't an agenda at all. It was a given. And, it was only, I think, demonstrated when we actually went to the market offering the loans. The problem for us hasn't been, not having that, the traction. Traction came in. The point was only about how open we kept the doors open. Because right. I think when you go to the market to give money, everyone comes, and especially when it's people who are lending to without any credit history requirements, without any collateral. And what we have been doing is we have a 10-minute process right from the point of download to the point that the funds are actually dispersed into someone's wallet. So what they actually did was we're a wallet agnostic platform. We partnered with all the wallet providers in Pakistan, and we integrated with all to provide the largest agent network for our customers, because that's where the touch points are going to be for the customers that we're catering to. That was one. The second one was it's been a seamless journey. So we've really focused a lot on the user experience side of things, just to make it as easy as possible for them. And then, of course, another element was to build that trust, which definitely was an initial challenge for us. But I think with time, as people started coming to us and they actually had funds in their hands, that credibility automatically started building. So the first 1,000 loans, for us, we went blind because for us it was also an important element to build our algorithm. And I think it just happened within the first month of operation that we got those customers. And ever since, it's been just a journey where we just have to limit the number of loans that we are actually now giving into the market. So I don't think credit has been traction in terms of credit hasn't been tough for us at all, because of those elements that we address in terms of user experience and the journey.
Right. Thank you. Before I move on to Halima, this one is for you, Noreen, from one of the attendees. They're asking, how is TASE different from conventional banks in percentage of successful applications and in percentage of NPL, non-performing loans? If that is something that you can answer.
Well, I'll try to answer whatever I can here. See, in terms of the applications, it'll be interesting to see how many applications actually get accepted by the commercial banks that we're talking about, the kind of niche that we're talking about. We talk about lending 1,000 rupees to 10,000 rupees, within a matter of minutes. Other than, the likes of a few telco-led banks, such as EasyPaisa, Jazz, and now some others focusing on it, I haven't seen commercial banks really getting into that field. So I think what really differentiates us from them is the product that we're offering and the user experience that we're offering. Banks right now, the masses, most of them are not offering those services to begin with, and that's the reason why now banks are coming to us to use the products that we are offering. For example, we partnered with two banks in Pakistan and also one of the telcos, whereby we will be providing nano credit to them, because we've now built the underwriting experience and the database where we have customer insights with the smartphone data that we gather through these customers. That's something that most of these banks, unfortunately, for some reason till date, haven't been able to capitalize upon. So I think the user insight is something that also differentiates us. If you talk about the NPLs, commercial banking NPLs right now, they hover around 9.5%. And this is a market that we are talking about that is already banked. These are individuals, who've probably taken these services for the longest time. The market that we've catered to, we've seen, 70% of the people who came to us never even had a bank account before us. So that's the kind of market that we're bringing into the financial mainstream. And yes, I think NPLs initially definitely were high because we were going blind, trying to get in as many insights as we could. And going blind, you do get a lot of fraud, because Pakistan, as a lot of us would know, is a very fraud savvy country. So we did have defaults, above 30-40% when we started off. But the good thing is, over the span of 2.5 years, we are at par with banks, almost at par with banks. So if that answers the question, I couldn't be more transparent than that.
Right. Okay. I think, that answers the question. Thank you so much. Halima, trust is one of the most important things that, a financial services company or a fintech has. If the consumer doesn't trust the company, obviously they won't do business with it. They have to trust them to be able to give them their money. How did you build that initial trust among the consumers, and who have been using these services? You said when you were trying to research around the product, you guys found out that a lot of men are also doing these committees, which is not something that we hear a lot. So a bit on that, and then the first question, obviously, around trust, if you can answer both of them.
70% of our user base is women, and these women are either micro entrepreneurs or business owners or salaried individuals or housewives. When it comes to the rest of 30% of men, they are usually shop business owners, salaried individuals, young people who are just getting themselves into the workforce and realizing, here, I have an income, I should start saving as well. So this is the dynamics of our user base. In terms of trust, obviously trust was especially in terms of community kind of capital that you're putting together, it is slightly difficult to build. And the way we tackled initially was started partnering with committee heads. So there's always there's a committee, a manager. So we started partnering with those people within Karachi, within Lahore as well, and giving them the tool that we had built initially, which was just about productivity. It was all about wellness, that, hey, this is now your digital diary, take it, bring all your customers on board. Because when we did a lot of research and ran pilots, we understood the operational modalities and power dynamics within these committees, and realized that, hey, committee manager is actually the most important person in this entire group of people, and started partnering with them. When we started realizing that there's an inbuilt virality factor, and the committee manager actually started bringing the entire group on board, we started opening up and started matching people into different committees and providing these commissioners or committee managers an alternative income as an incentive to keep on bringing more and more groups and manage more digital committees on Uran.
Right. Thank you, Halima. You are doing business through retailers. You're providing services to retailers who are then, selling these services to their customers. Since the start of COVID-19, have you witnessed any changes in usage patterns? Have you seen the usage go down, or has it increased? What are you looking at in terms of numbers?
Yes. Obviously, because of the shutdowns, a lot of the retailers are no longer essentially functioning for this. At least even the ones that are open are operating fewer hours. Our categories of retailers is sort of across the board, but about I would say 45% is kiryanas and pharmacies, and usually it's the non-branded pharmacies. So we have seen transactions actually go up at those retailers. So we in fact ended up at a stronger March than February, despite the fact that Karachi was shut down for practically 2 weeks of March, and Lahore was shut down for at least 9 days or so, or Punjab was shut down 9 days or so. Since then, the closures have increased. So April, in fact, was a little bit harder hit, simply because of the. Also, the other factor is that the end customer for us is the blue collar, financially excluded customer, and the income that they use to put into sort of the banking system or digital system or telecom system is usually their blue collar income, which is dihadi income or daily wages, as you would say. So those have been cut dramatically, and typically we see that effect also in the summer months, as it is sometimes because of rains and monsoons and stuff. We see every year that there are days when those incomes are cut and our sales go down. So a similar effect is there. However, we've been fortunate. We actually thought that most of our business would erode away, but I think our impact has been from March to April, we've been probably less than 20% lower, which is, I think, pretty good given the circumstances that most tech companies have really stopped functioning these days. So knock on wood, we hope that things recover and we don't see another declining month. This is our first decline month since inception, so it's been a bit strange. This meaning April.
And how optimistic are you about the recovery when things settle down, when the dust settles down? Do you think that this is going to be more like a V-shaped recovery, or do you think that we're going to see it take a lot of time to get back to where it was?
I think it's difficult to say. I think predicting a full V recovery is that's difficult
When
to
it comes
say.
to your business.
For our business, yes, I think it's probably simply because I don't see income levels going back up that quickly for a whole host of reasons. Whether it's the fasting months, Ramadan month, that's typically generally slow, but Eid is usually a very good recovery period. So typically that month is never down for us, but few days are down for us. What I do see is, let's say, the shops started opening up yesterday. And so yesterday's numbers look pretty good. So we are hoping that, so we're literally seeing it, day by day. This is new phenomena. We could predict this would have been our fourth Ramazan month in our operational history. So we could have sort of factored that in terms of the weekday movement and incomes of people and daily wages, etc. But adding COVID to that, this is sort of a singularity. What I'm optimistic though that the retail business will come back around, just simply based on the fact that there was a significant increase from Saturday to Monday in our volumes, simply because some shops were being allowed to open again, etc.
Yeah, right. Thank you. Thanks a lot. Brendan, what is it that excites you the most about the opportunity in Pakistan, about the financial services opportunity in Pakistan? And has there been a time in these last 2 years when you thought that, no, this is not the market where I want to build my company? Let me just pack my bags and go somewhere else and try doing this over there. And the second question is from an attendee. I think you probably get asked this a lot. How do you plan to position SadaPay versus the wallets that already exist, like Easy Pesa and Jazz Cash?
Okay, yeah. So to take the first one, I think what's most exciting about Pakistan is, personally, I feel as if I discovered something that people just were not paying attention to. You guys have been here, but there's entrepreneurs and institutional investors around the world who have kind of overlooked this market just because of bad press from turmoil over the last 10 years, which obviously has improved and changed significantly. So when I first came here and started to explore the market for myself, everybody back home thought I was crazy. And then each and every week that I was here, it's almost as if things just got better and better. I was really taken back by how people were just so supportive of me as a foreigner coming here. Everybody wanted to make introductions. Everybody wanted to get involved in the project. And it's just been tremendous support from the ecosystem as well, other fintechs, the financial institutions, the banks, the regulator. And no, there's not a point when I thought this is a mistake. That hasn't happened yet. So inshallah, we'll continue on the right track. And then as far as SadaPay's business model, I believe the question was, how would we position ourselves to be different? Is that what it was?
Yeah, different than Jazz Cash or Easy Pay.
Yeah, so I think there's an element of just being focused. When you build something for everybody, and let's say the telco-led wallets are trying to be something for everyone, you really end up having really shallow product coverage, or you have wide product coverage and maybe shallow product coverage that maybe doesn't give you much loyalty, especially in a market like Pakistan, which, as we know, is just so price sensitive. Customers will move from one platform to another just because you're going to save a few rupees. So we want to find a place where we can foster love. Recently, I've been a romantic and I've been talking about love. And I think when people fall in love, they do crazy things for each other. And when a customer can fall in love with your company, they will do crazy things for you. They will sit outside an Apple store for 12 hours to wait for your new iPhone. And I haven't seen love fostered like that here in the 18 months that I've been visiting Pakistan. And what we want to do differently is have very deep product coverage. So it's not a secret now that we're focusing on the freelancer market, which unofficially the state bank has some estimations that it might be about $5 billion. A lot of that money, which is just being held overseas, these are Pakistani earned dollars that are stuck in PayPal accounts or Payoneer accounts. So we want to see if we can bring that back to Pakistan. So we will position ourselves as a very focused product. SadaPay is an account that anybody can open, but we will be very deliberate in the type of innovation and products and services we will build for the freelancer market. What's interesting about the freelancer market is that they are like a business of one person, right? It's the sole trader, someone working for themselves. And the products and services that we build for them could potentially mature into small business products, which are businesses of a few people. So positioning ourselves differently from EasyPesa in a way where we can be very, very specific with our customers. We can win with love, where we are just doing amazing things for them, and also potentially being very competitive on pricing. So I've noticed that financial institutions here, not just the banks, but also including the telco-led wallets, they seem to be very vendor reliant. They have weak tech teams, and they're reliant on their high fee revenue models. So because of that, they might have a hard time competing with such a small and nimble fintech, which can get so much more done with far fewer people on a unit basis. So I think for us, we can move a little bit faster. We can have a more intimate relationship with our customers, and we're looking to go wedge by wedge. We're not trying to build something for everybody. We want to have the wedge and then expand that as it makes sense to do so. And none of us in this room have the answer. What is going to have the biggest impact and include the most people into the formal financial system? We're all learning. So we'll start with freelancers and then we'll take it from there. Maybe we spend a lot of time in remittances, for example, not to give away too many secrets.
Okay, sure. Thank you, Brendan. Noreen, Yar was talking about this. He said that a lot of their end customers are those blue collars who have seen their income levels drop significantly during the last few weeks, few months, 2 months. These are the customers that you're also trying to serve with this, especially with your nano credit product. So first question is around, how are you dealing with the repayments? Are you trying to facilitate those who have borrowed money from Tez during the last few months and are supposed to pay you back? And second, have you seen the demand has the demand increased because of this? Are people now turning more to services like this? And also, I'd like to add this one from the attendees too. Just a second. Okay, these are the two. I'll get to that later. So if you can answer these two and then go to the next one.
Well, I think this wave hasn't been easy for any lending services provider. The same case for us. Yes, with our consumers being really hit, their income capacities being really tainted, definitely there is an impact that we see in terms of their repayment capacities. At the same time, the willingness as well, because everyone is holding on to liquidity. So, when the lockdown happened, we just halted lending for a bit, but now, that's primarily to have curtailed our credit risk. But at the same time, we did we are now just focusing on very, very selective lending for a very, very niche, less riskier group of customers. But, we do understand that this is a time when customers need us the most. And I'll be going back and forth between your two questions. Yes, definitely the demand has gone up. We have limit requests, you just bouncing into the system every day. But at the same time, we need to manage our default very, very smartly, because there's definitely a good bank and a bad bank that we need to manage here. And so how we try to facilitate customers is that we've restructured loans that we've been requested to restructure. So we've provided deferments to many of our customers, ranging from 30 days to 60 days, because the tenors are so short. It only makes sense to provide them these deferments to a certain period. So we've been deferring those loans for them. At the same time, we've also been trying to come up with strategies where people are where the repayments are just eased. So, for example, for some cases, we are focusing on not just waiving off their interest or their late payment charges and making it easier for them to repay whenever they do tend to repay. So, other than restructuring, cashbacks, and just incentivizing repayments, that's what we've been doing. But also at the same time, I think since this time is tough for all, and we understand the income capacity is being tainted, we've tried to be very compassionate in our communication with our customers as well, because we do not want them to feel that even despite the circumstances, we're being stringent about how to proceed things. So I think it's been a mix of or not a trade-off, but rather a very delicate balance of how we've proceeded with our recoveries, at the same time being conscious of the needs of our customers. In terms of, I think, the lending piece of consumer lending, I think credit underwriting will really see a shift in terms of how we're looking at lending overall. The consumer lending that we used to see as a very, very prominent field to be in might not be the field in terms of the credit risk in the near to medium term future. So, even with Hiraj, I think what really works for them is that these are primarily merchants who have relatively more liquidity, or at least working capital needs, as opposed to the consumer masses. So we're also now, thinking of pivoting more from a consumer to a working capital model, trying to address the needs of customers more so on the productive side. So that's what we're doing right now.
Right. Thank you, Noreen. Halima, how has it been like? How has it been for Quran? Have you seen the demand go up due to COVID-19, or are you guys seeing a decline? And what happens when somebody defaults on a payment that they are supposed to make to a committee done through Quran?
So to answer your first question, in the last couple of months, we've seen three types of behaviors. The first one, when there was a lot more panic and there was a lot more uncertainty around what is happening and how my business is going to affect, or my jobs are going to be there or not, we saw a surge in savings. So people who had liquidity at that time started putting it in committees, and we also very strategically structured our committees at that time and called it an emergency funds committees, and these were shorter 5 months quick cash committees. So we saw a surge in that, and that was all of March, early April. Mid-April, then when people started losing jobs, things started becoming economically very unstable, we saw a surge in liquidity. So people were coming in and asking for, hey, can I get the first lot? My husband has lost his job, or I've seen a reduction in my business income. Whatever that reason was, we started seeing that liquidity increase, similarly to what Noreen is saying. The third thing that was very interesting in both these kinds of behaviors was people who had that capacity at all times. We saw that social capital come into play. What that means is people who were supposed to pay by the 10th, for example, started paying a lot earlier so that they can help the entire community. And that was very interesting for us to see that the people who had that willingness and ability to pay were making those payments come in quickly. So it was an interesting opportunity from our perspective. How do you measure and quantify social capital in these economic shocks, right? The second question that you had was in terms of default. Similarly to what Noreen said, that we had to go and have that open conversations within the groups that we had penetrated ourselves into, and ask and be able to say that, listen, we understand the situation, and if there is a problem, be able to open that platform for them to communicate and say that I can't make this payment right now. I can't. I will be delayed in payment. So we haven't touched wood seen any kind of default happen right now, but obviously that is a case that we are actively working towards to make sure that we can manage our default rates. And make sure that the entire communities that come together to raise capital doesn't get affected.
Right, thank you. This one is for you, Hiraj, from the audience. What is the biggest challenge for OneLoad today? And also, I'd like to ask you, because you're an active player in this space, why do you think cashless payments have not accelerated in Pakistan, even when we're facing COVID-19? These are the trends that we're seeing in the Middle East, especially in GCC, and in some other markets too. But in Pakistan, at least, when it comes to looking at the space, I'm not really seeing, a big surge in cashless payments as
I just want to jump in here. I just want to jump in quickly. There's a quick stat from OneLink that I was familiar with, that 67% increase in interbank funds transfers in the last 2 months, which I think is quite sizable. But that's only one type of transaction. I'm curious what Yar has to say.
Yeah, regarding the biggest challenge today, our business is largely connected to the telecom and the banking players. On the telecom side, we see a reduced consumption. So telecom services for 96% of the market are very much like consumer goods. They're not considered essential services, or rather, about 80% of their consumption is considered discretionary spending, and 20% maybe, essential need. So when their income gets cut, their spending gets cut. So their consumption gets cut. They may buy fewer Pepsis a month and eat fewer pans a month, and hence use fewer telecom services a month as well. So telecom sector has declined from, these are numbers from newspapers, from Dawn. They did a survey and etc. And so it went down from March to April, it went down at least 20%. And from April to May, March to April, it's expected to have gone down 35%. So there is simply because of their user base is the blue collar worker again, and if he doesn't have his daily wage, he's not able to spend. We are a distributor of their products, so if the average consumption of telecom services goes down, that's a challenge for us. Secondly, when companies are hurting, their ability to give commissions to their retailers or to their partners and their distributors go down. So we are also seeing a lot of challenge on that front as well, where they have just started cutting margins because they are hurting for cash. On a different, on the other question that you asked, which is why cashless payments have not taken off, we look at the experience of the panwala who's our customer, the small pharmacy, non-branded pharmacist who's our customer. For them, and the consumer that visits them. So realize that most of the people in Pakistan get paid in cash. Let's not look at the 8 to 10% people who get paid through the banking system, or the 3% elite who get paid through online banking and all that stuff. So for them to take money in cash and then put it into a wallet and then pay through that wallet through a very cumbersome push mechanism where they have to spend 3 minutes to do a QR payment through a phone, which has to be aligned against a piece of paper. We activated 5,000 JazzCash locations for JazzCash wallet acceptance. And, the amazing thing is that the average transaction size was 1,500 rupees. So it was not a, 50 rupee, 80 rupee transaction. At these small shops, most of our shops, 95% of our shops do not have a door. The shutter down, shutter up shops do not have air conditioning. So at those shops, the average transaction size we saw was actually approaching that of regular branded pharmacies, in fact. However, the issue was the cumbersome nature of the QR code transaction, because it was a push transaction. It was not a dynamic transaction. It's on a static code. The consumer has to go through 4 steps to do it. On the other side, the retailer has a different challenge. The retailer, if he accepts cash, he gets the cash immediately. He can pay his suppliers through that cash immediately. If he accepts Jazz Cash payment, QR code payment, or EasyPaisa QR code payment through the OneLoad platform, etc., he has to wait a couple of days for that money to be credited to his account. So not only there is a loss of value for every 100 rupees, he may get 99 rupees, but he has to wait a day to get it. So these are some of the challenges. Now we are hoping to solve some of these challenges, and we also on the heels of companies like SadaPay and Brendan, who has done a lot of work with the State Bank, we also received an approval for the electronic regime. And we want to digitize our retailers and make them an e-money user, so that, and through that, by bringing them into the formal financial system, we hope to solve some of these working capital problems for them further in terms of acceptance of payments. So they no longer, or theoretically, maybe in a few months' time, we are able to give them an offering which has less friction, has less loss of value, has more immediate settlement. And I hope that as the industry moves towards that, and we are collaborating with Visa, MasterCard, and of course, EasyPass is a very big partner. We already do about 400 million rupees of monthly inbound payments from EasyPass. So we already have a base to start from. And so it's and they are also very proactive in trying to energize it. What I see as a result of COVID is a lot of urgency by all participants to try and solve this problem. I hope that people stay as a group. We can solve them. As a small entity, OneLoad cannot solve them. But if we have 2-3 banks with us, 1 or 2 schemes with us, and other partners with us, I mean, one collaboration that potentially Noreen referred to. Possibly there's a possibility of us working with Noreen's company and having our retailers get loans from them and then do their business through those loans, for example. So collaboration is the name of the game. And I think the kind of forums that Zubair, you are conducting today, building better awareness of this, I think only through collaboration the market can win. And I think that's sort of what I would like to summarize as the market comes together, and maybe this crisis is an opportunity.
I have a kind of a question also from Hiraj.
Sure, go ahead.
So it's interesting, and you mentioned the payment costing side of things, and Brandon and Hiraj, both of you are experts over here on that. But what I feel is that one of the biggest impediments to still not moving to cashless is that digital is more expensive than cash still. And until and unless digital is more expensive than cash, people will never move to digital. And when you talk about your merchant networks, now who the king is the merchant. Even if companies like yourselves want to just slash your own revenues, how do you really address the challenges in terms of paying the merchants who now become your sole distributors? How do you manage that?
Okay, the risk of giving away the secret sauce, all I would just say is that for us, the challenge is to incentivize the retailer to accept payment into the OneLoad platform. And if the OneLoad platform is important to the retailer, we can lose money on one end and make it at the other end. So that synergy needs to be there. If the retailer believes that if money ends up in OneLoad, it is valuable for me, that is basically where this game possibly changes, or OneLoad or any other digital platform. So the retailer needs to be financially convinced that there is more value to money coming into the digital system than through the cash system. And how do you create that value? I think, Noreen, that's perhaps a longer conversation and a brainstorming session at some point down the road.
Right. Thank you. Yeah.
Thank you,
Brandon. So after this, there have been a lot of questions from the audience. I've been able to take some of them, but there are a lot of them that are still unanswered. I'll ask this question to Brendan, and then we'll quickly move and take these questions from attendees that they've shared and take them to the panelists before we conclude the panel. Brendan, you, as Yar said, that you've been engaging with the regulator in Pakistan for quite some time. You finally got your license. What has this relationship been like? I mean, and how do you see state bank and other government institutions in Pakistan? What kind of role do you see them playing in improving the fintech landscape in the country?
Yeah, so there's definitely, as Yar has mentioned before, there's definitely now a sense of urgency that's come with this pandemic to digitize Pakistan, and that's riding on the heels of all the pressure from FATF and IMF, World Bank, etc., to formalize Pakistan's economy. So the regulator it's actually nice to work with them because they get it. They understand that we need to do something different here. If you keep trying to do the same thing over and over and over again and you expect a different result, then you're crazy, right? This is what they say. So now the state bank realizes, okay, we have to do things differently because what we've tried in the past hasn't necessarily picked up yet. And in the last 6 months, there have been a countless number of new regulations and policies that State Bank has issued. Even over at SCCP, new things have come out. And personally, I can say it's been a real pleasure working with the State Bank because what they do, and specifically I'm going to shout out to Sohail Javad, who's the director of payment systems. He realizes that there's a box that a regulator has to deal with. And sometimes you want to do things outside of the box, but then you incur risks potentially. And the regulator's job is to protect everybody's money here in Pakistan. They're trying to protect the people. So when a fintech comes to the state bank and says, hey, I have an idea, let's do something differently, like this other country has over here, the regulator wants to see, okay, yeah, that looks nice, but we have to figure out how that can fit within the box here in Pakistan so that we can protect this unique market of people. So it's been a little bit of a give and take relationship where we offer something and then they offer a response, and we try to work our way towards a solution. So it's great to see that they're extremely open-minded, and they definitely want to try new things, and that's going to reflect once these EMIs are starting to operate and getting their propositions in the market, because we are the ones who are going to put fire under the banking system. And it's not a failure of the state bank on any level, I personally feel. I would like to blame the banks here, because the banks usually, they don't want to try innovation. The boards of the banks don't really care to spend money on innovation because they're so profitable doing the traditional stuff. So when they want to make an excuse, they point to the regulator and say, oh, we can't do digital, we can't do new things because the regulator has all these restrictions. And then State Bank gets a little frustrated with that because they're trying to facilitate. So at the end of the day, I think the regulator here really understands that digital is the need of the hour, and they want to facilitate that as much as possible, and they're very busy working on that. So we saw that with the MDR circular. We saw that well, I don't want to get too technical depending on what the audience is like, but you can definitely see that there's been a lot of effort on their part. So for us, that's been great. I think for the EMIs, that's been great. Over at SCCP, we've seen a lot of awesome things as well. And then as Yar pointed out, there needs to be some collaboration in the ecosystem among the different players. So I personally don't look at any of the other EMI license holders as competitors. I see them as peers. So Hiraj Saab, I would like for you to join us tomorrow for the roundtable. I'm calling you out. We have a 2 p.m. call with the rest of the EMIs. You didn't accept the invitation yet, so I hope to see you there.
My apologies. I look forward to joining. My schedule wasn't clear earlier.
It would be great to have you. And then, of course, with Noreen, I have a chat on Friday. Unfortunately, I had to push her up for an hour. And then Halima, I spoke to just recently. So the ecosystem is still so small in such a huge market. And the regulator wants to work with us. And we are the ones in this webinar, we are the ones who are pushing the boundaries. We're trying to do things differently, and we're trying to make a real impact, not the banks. So the regulator is asking us, how can we do better for Pakistan?
Right. Thank you so much, Brendan. Noreen, this one's for you. How did you guys segment your market, especially in case of gender financial inclusion? what were the qualifiers that you used, and are you planning to make any changes in the segmentations post COVID-19? This is from the audience, if you'd like to answer.
Well, so segmentation is primarily based on consumer digital patterns that we derive from smartphone data, and also, their behavioral patterns in terms of repayments, and how they really interact with the Tez app. So, whether or not they've answered a certain way in our questionnaire, whether or not they say they're a student or a blue collar worker or a white collar worker. What really determines their true segmentation is their consumer patterns and the digital footprints that their smartphone data really, screams out. So that's how we really conduct our segmentation. And now we have assigned limits to. We've assigned over, about 500,000 limits, 500,000 limits, and while that we've actually seen a consumption pattern across these various consumers. And of course, that really provides us rich insights into how these consumers are behaving in terms of their digital profiles, their financial profiles, geographic profiles, social demographics. Every one of these elements really comes into play to derive those segments. And just to let you know, the kind of segments that we've been catering to so far include micro entrepreneurs, which includes merchants, retailers, and other micro entrepreneurs. We have been, a very good segment has been the lower end of the white collar workers. We call them Henrys, high earners, not rich yet. Then of course blue collar workers and some students and housewives as well. So those have been our primary segments. But with COVID, and as I mentioned earlier, we do see that there will be a shift coming within how consumer patterns really operate. Consumer patterns will really be shifting now. And, the current underwriting or the current segmentation model will probably not hold true. So I think a lot of work will really go into how we look into these consumer patterns. We'll probably have to undergo that entire learning exercise again to see whether or not they even remain relevant. And depending on that, in terms of the segments that we are targeting, at least in the near term, and more so from a risk perspective, we do intend to focus more on working capital loans. So these includes more so merchants and segments that are salaried or otherwise engaged in businesses on a day-to-day basis. So the near-term future, that will be our focus for now.
Right. Thank you, Noreen. Halima, this one is for you. They're asking if you think the idea to have electronic identity first in order to have a greater number of people engaging with electronic transactions is the way to move forward. And I mean, the question is around, do you think lack of advancement in electronic citizen recognition is hindering the progress?
I think that's one of the challenges that digitization in Pakistan need to be solved for first before we can look at digitization completely. Like, we have to look at it from a holistic perspective, and identity and recognition, allowing people to have that kind of digital identity to be able to move faster into the financial services is absolutely important. And when we talk about what Noreen was talking about from segmentation perspective, there are going to be micro segments, sub-segments of the current segments that we all served that will open up, and their needs are going to be completely different. Their understanding of financial services are going to be completely different. So how quickly can we identify them? How quickly can we get them on board with our services is going to be a challenge. And we have to make sure that the literacy from both numerical, oral, and financial and tech literacy, that we have to be cognizant of these things while we build the solutions for them to get them more integrated. And if we don't take these things into considerations of different vulnerabilities of people, of their economic resilience, we are going to risk re-exclusion of a large part of vulnerable groups. So we have to be super cognizant of these things and nuances when we rush towards digitization. And also to see the uptake on digitization, right? Like it can't just be coming from product makers. It has to be, the customer has to be ready as well. So you need to start catering to those people as well, and making sure how quickly can we get them onboarded, how quickly can we service their needs so that there's an uptake in the products that you're building.
Right. Thank you, Arima. PR, this one's for you. What are your views on digitizing supply chain management, which includes stock management and customer ledgers for retailers as a means to open them to digital payments?
That's the big opportunity in Pakistan. We have, according to one report, we have about 4.5 million shops that essentially purchase products every day from suppliers with cash on a paper, pen and paper based ordering through the order taker. They pay in cash, they collect in cash from their customers, and their distributors essentially are very unsophisticated, and there are very little sort of economies of scale in that entire exercise. There's a lot of leakage. So our supply chain is extremely inefficient, and simply because there is very little digitization in it. So whoever can capture the overall supply chain of the small shopkeepers, your formal retail sector is very limited. 22,000 POS machine locations are what is served by the traditional banking system. So assume they are the ones who actually have printed receipts and all that. But what about the other, say, 4.5 million shops? So whoever can crack that, now that's again a longer, bigger conversation, but that's a huge opportunity. And the SME banking space, and especially the micro SME banking space, there are so many different opportunities in that it's mind-boggling. And so the challenge for me and many others is when we start talking about that topic, it's just saying that digitizing the supply chain of the small shopkeepers, that itself is that single line means 50 different things you can do. So I think that itself probably has a place for an entire sector of companies, whether it is digitizing the records, the accounts, the sale, and also predicting behavior of those retailers, predicting behavior of the consumers who come to those retailers, etc. But that's a huge opportunity. The day that gets done, or whoever can crack that nut at even a small level, will actually make it really big.
Right. Thank you. Yeah.
I'm
Brendan,
sorry, I don't have the summary answer there, but I'm just saying that that's a very big opportunity.
Sure. Brandon, this one is for you, and then we'll take the final remarks from every panelist before ending the session. This is the last question that we're taking from attendees. What is the plan on taking on the challenging KYC requirements for your business, especially considering the FATF scrutiny on financial sector in Pakistan? They're talking about Financial Action Task Force. We're still in gray list, right?
We are.
Yeah, unfortunately.
Yeah. So the thing is, there's a number of financial technology providers around the world who are building neat technology for banks. The good ones are expensive in terms of rupees, because we're here in Pakistan working in rupees and the margins are lower. So when we scoped out all the different options, we realized pricing is a little too high from the fancy KYC and anti-money laundering vendors in Europe. And we decided just to build it ourselves. So the thing is, here in Pakistan, we only have 2 identity cards that we would really deal with, at least for us, the CNIC card and the overseas Pakistani NICOP. So we had the technical capability to just build that in-house. So we built a system that recognizes the identity card, reads everything that's on it, looks at the back, sees the QR code, matches everything. And then we match your face. So we plan to launch, hopefully with the permission of State Bank, something we're working towards, a sort of facial biometric instead of a fingerprint biometric. I also had a great meeting with the chairman of NADRA last week about it. And the idea is that, especially now in this post-COVID era that we'll be in, we don't want to have people giving a fingerprint everywhere and touching the same device that how many other people are touching in the same day. So we're basically going to do a 68-point liveness detection where we see the distance of your eyebrows to your nose and your mouth, and we can recognize you or you matching your face on the identity card and whatever is available from NADRA, the identity authority here in Pakistan. So it was a decision for us because what we would pay to onboard so many customers to a foreign vendor, we could just build it ourselves in-house, and through testing we realized it was actually not so hard to do. And then essentially we would also have to run the sanctions list because we'd be working with remittances. We'd also need to comply with like OFAC, which is over in the United States, for example, United Nations sanctions list, NAB list here, ATA lists. So all of that, we want to do it digitally. We want to get that done in about 2 minutes. So when you onboard for an account with SadaPay, you would have your virtual card provisioned for you, and you'd be ready to use your account in only 2 minutes, as opposed to a bank, which, as we pointed out earlier, could take a month to get an account. So handling that in-house, we thought we could do a really good job if we're just focusing on Pakistan. If you're a bank in Europe and you have to deal with so many different kinds of identity documents, passports and driver's licenses from so many different countries, then yes, maybe you need some help. But here we felt comfortable just figuring it out ourselves.
Right. Thank you, Brendan. We're moving towards final remarks. We'll start off with Yar, as he has to leave in 5 minutes. He has another meeting. Yar, 2 questions before you leave. Are you still optimistic about the fintech sector, the financial services sector, using technology as a medium to provide financial services to different businesses and individuals in Pakistan? Or let me rephrase it. How optimistic are you about this? Because I don't think that's a question, being optimistic or not. How optimistic are you about the future? And second would be, where do you see OneLoad coming out of these coming out of COVID-19 in the next few months?
I'm very optimistic, and I think I'm more optimistic now than I think I was a couple of months ago, simply because I think the COVID crisis has jolted a lot of people, and what I referred to earlier has sort of created more opportunities for people to come together. Sometimes it takes a crisis for people to collaborate and for people to unite. So what we are seeing is that a lot of, one of the biggest challenges that we have had is that every company we try to work with and bundle their services and make their services available and through our platform, which typically reduces their costs of doing so. The technology, the integrations, all these exercises are typically something that people are very hesitant to get into. So for them to invest into something that can propel their business, there is a bit of inertia. There is sometimes a lack of real push. With this crisis, I see that people are now a lot more open to making tougher decisions and investing more in collaborating, interacting with each other, and working together to hopefully build what I see a better financial system, a better fintech ecosystem, and a better sort of financial world for the Pakistanis. Where I see OneLoad, I think that inshallah, this is a rising tide. This is a rising tide that will, hopefully soon COVID will pass. Yes, it will probably reset a lot of our behaviors for some time to come, but hopefully soon it will pass, as well as many things else in life and in history before us. What I see is that in this rising tide, a lot of little boats like OneLoad will rise as well. So I am very optimistic for my company, for all the companies represented in the panel here, and all the other players in this space working towards innovating and making the financial lives of Pakistanis better and better.
Right. Thank you so much. Yeah. Thanks a lot for taking the time. And We'll see
Thank
you.
you so much. I have to
We'll see you
excuse
soon. Thank
myself.
you.
It was a pleasure being part of this panel.
Sure.
Thank you so
Sure.
much.
Thank you so much. Thanks a lot.
See you tomorrow.
Thank
See
you.
you. Bye-bye.
Bye.
Noreen, if you can also take this, answer the same question. What do you think the future of Thales is going to look like after COVID-19, and how optimistic are you about the future of the entire financial fintech ecosystem of Pakistan?
I'll begin with the ecosystem. I think I would definitely second what Hirat said. I do see COVID as a blessing in disguise in a lot of ways, and I think it may, even enhance financial inclusion to a great extent, especially with digital transactions now being more organically accepted by the masses. Yes, I do understand that there will be challenges here as companies move from this response phase to their recovery phase. How long that will take is still uncertain, but definitely digital will be scaling up, and some segments more so than others, provided that the liquidity issues and the funding constraints could be really addressed, because a lot of the digital players, or the fintech players more so in this field, most of them are still earlier entrants, a lot of whom are going to be facing liquidity constraints. So I think that's one aspect that has to be looked into before you can actually build upon this opportunity to really scale. As far as Thales is concerned, definitely very optimistic and realistic as well. We always had that vision of a neobank, and for us, COVID has only expedited achieving that vision. Since we with credit only live now, we are expediting our insurance vertical that will be going live within the coming month. So we will be offering health and life insurance. In addition, our savings vertical will also be going live within the next 2 months, 2.5, 3 months probably, whereby we will be offering fractional gold as well. So, and then, some other aspects within lending also coming in. So yes, definitely very optimistic, but just hope, that these uncertain times don't just extrapolate for longer than we could sustain it.
Sure. Hopefully that's the case. Thank you so much, Noreen. Halima, the same question for you. Where do you see Iran going next, and how do you see the future of financial ecosystem, startup ecosystem of Pakistan?
I think
within the next few years?
every crisis brings opportunity. So we will definitely see. I'm very optimistic about what the future holds. We'll see new models. We'll see some will pivot. The current models will pivot. Some will grow. Some will face liquidity issues, like Noreen mentioned. But all in all, I think it is a blessing in disguise, and we have to now. I think the onus is on us. How quickly are we able to cater to the customer needs? Not just as the regulator, every stakeholder in this ecosystem needs to take that responsibility and make sure that any product or any solutions that we're building is a holistic solution and is sustainable and it solves for the needs of people. In terms of Iran, I'm super optimistic. One thing that has come forward, which is very interesting, and things that we've been pushing for so long, that saving is the only thing that you rely on when things go south. And your community is also something that you rely on when things go south. So I'm super excited about what the future holds in terms of products as well. We've started adding value adds. So anybody who takes part in our committees has an insurance in terms of health and disability, to just make sure that people are realizing that what are the different risks when it comes to savings as well, right? What are the other options that you have in terms of savings as well? So pushing them into the education policies or mutual funds, So very, very exciting. The customer is also very open right now to be able to experiment and take on new things. So hopefully things are gonna take off from here.
Hopefully that's the case. Brendan, the same question for you, and another one too. When are we getting a launch date? Forget when are you guys launching. When are we getting a launch date? So the announcement of the launch date. When is
getting
that?
my card?
I know. It's funny because we've had a lot of people joining our wait list, and we can't really give them an official date, because the challenging thing there, and to be totally honest publicly, is that imagine if we have so many people who have joined the wait list, right? And we need to let all of those people onto the platform at the same time. That's going to put a tremendous amount of stress on us as an organization that's just getting started. So we'll have this beta phase where we're only going to let up to a few thousand people in, and then we'll make sure all the systems are working really well. And after that, we can gradually start to let people in from the waitlist. This way, we can maintain a high level of customer experience, and make sure that we can scale our back end systems and our back office staff to meet the needs of the demand. So that's what we'll be working on over the next few months. And then as far as the ecosystem, I guess that was the next question.
Yeah.
I see that still there are so few players in the ecosystem, and I hope to see some collaboration, because I strongly believe, and I've told you before, I think that if you want to go fast, you go alone. But if you want to go far, we have to go together. So the best chance to make an impact is probably for all of us to collaborate. So I think we're all peers here, and there's definitely some things that we can work on, even with the two lovely ladies still in the room.
Right. Thank you so much, Brendan. Thanks a lot, everyone, for joining for this COLABS session. Thank you, Noreen. Thanks a lot, Halima. Thank you, Yar, for joining in. It was a pleasure having you here, and looking forward to seeing the progress that you guys make in the next few months, keeping an eye on all the products. Thank you so much. Have a good one.
Thank you.
Thank you, everyone. Bye.
Bye, guys.
Bye.